Thanks for the introduction. I see the clock ticking already, so I'm going to jump right into it. So very warm welcome again. And, of the headline that we have there, PMS and AIF, I will focus a little bit more on the AIF side today and just give you some perspectives on where our industry could be heading, what sort of products could come through, and really what it takes to succeed. So this is just a quick snapshot of what's happening globally. And if you look at those bars on the left and you look at the third from the left, that is in the year 2020 what global AUM stands at. So the global assets under management across all the various styles of investing is about $100 trillion today. That's the global asset management business, of which alternates is 15%. $15 trillion is the share of alternates in AUM. You have the traditional active management that we're all familiar with here, done by mutual funds at about 49%. We have solutions at 14%, and passives, which have been growing very rapidly at 21%. So that's where the global AUM stands. But the more interesting picture is on the right-hand side, which is the revenue that this AUM generates. So on the 100 trillion AUM, the total revenue that is generated currently is about $331 billion. So around 33 basis points on average across this entire pool of capital. But when you look at the revenue breakup, it's a very, very different picture from the AUM breakup. So if you look at the revenue breakup, alternates is 42% of global revenue, alternate asset class based revenues. The traditional active is 39%, solutions is 13%, and passives, for all the growth that they've had, is just 6% of global revenue. So effectively what we're saying here is that when you look at the pricing across these various categories, they're very, very different. And it really boils down to where or which asset class is creating most alpha for clients. The higher the alpha you're able to generate, the higher is your pricing power. It's as simple as that. And to that extent, alternates today are priced roughly at 3.5 times what a traditional active manager would charge, and 9 times what passive funds charge. And while it may look like a very big differential, the fact is they tend to also create that much more alpha, otherwise clients wouldn't be paying that. So clearly from a business point of view, for players in this segment, I think the more important operative number is revenue. As they say, AUM is vanity, revenue is sanity, and profits are reality. And in our business and alternates, clearly it is the revenue number that is critical, because revenue means you're adding value to clients. It allows you to pay your employees well. It allows you to reward your shareholders well, and society at large. So I think what's really interesting is where alternates fit globally, and I think this is probably one of the most important asset classes from a business point of view. Within this, what are the trends that we've seen within the broad assets AUM trend is that alternates and passive investments have been the fastest growing segments in the total complex that I showed you earlier over the past decade. And private equity in particular within alternates has been growing the fastest. And it's very logical, because in a low interest rate environment, it normally breeds a lot of risk capital. That in turn breeds a lot of innovation. Most of the world's biggest innovation tends to come in phases like this, when capital is freely available and is quite cheap. So it's no surprise that private equity is doing incredibly well globally, as well as in India. And from a growth driver point of view, the ingredients that you need to succeed are very simple. You need a lot of product innovation in the alternate space. If you can't innovate, you can't really be a player. You need very strong distribution networks, especially in the institutional and high net worth category. And talent acquisition is very, very important. And more important, or equally important, is the alignment of interest. Again, the sort of talent that you look at in the alternative space, the sort of remuneration models are very, very different from traditional asset management. So alternates is actually a very different business compared to the typical mutual funds that we see today. Where could India head, or where could our business in alternates be over the course of, by the end of this decade? So where do we stand today? The AMC industry in India today stands at about 48 lakh crores. That's the blue bar on the extreme left. And if we just grow at 15% CAGR, which is, we're just saying that happens as a combination of fresh flows as well as mark to market. Markets also rise over time. So just with a 15% CAGR over the next decade, which is actually lower than what we've seen the last decade, by 2030, our global, India's total asset management AUM should be about 177 lakh crores. Now, making a few assumptions, we try and extrapolate where the alternate asset management space could be. So assuming today we are at just 10% of the asset management industry is alternates. So alternates on the 48 lakh crores, the AUM under alternates or category 1, 2, 3 AIFs is about 5 lakh crores. So we're 10% of the AUM at the moment. Assuming it rises in line with global standards that I showed you on the first slide, which is alternates become 15% in India as well over the next 9 years, the AUM potential of alternates goes up to 27 lakh crores from 5 lakh crores. So alternates as a segment can grow 5x essentially over the course of the next 9 years, with the overall industry growing at about 15% CAGR. So I think there's a lot of scope within that segment to grow. But the mix as we see it over time is for actives to decline. That's the largest part today over time. Again, passives in India will also rise quite significantly as a proportion of total AUM, and solutions also will be a very steady growth. So clearly we see India following pretty much the international trend as far as these mixes are concerned. And I think you'll see the same thing from a revenue perspective as well. What are some of the offerings that exist today? When we talk about alternates in the Indian market today, these are the products that are in force. At IIFL, we have these type of funds already. So you have crossover funds, which are pre-IPO type funds. You have private equity, real estate, long, short, and structured credit. But the suite of products that are there internationally, which have yet to even come here, are the darker blue ones: event-driven, market-neutral, activist funds, multi-asset, yield-based, commodities, global macro. These are very large asset classes globally, by the way. They're relatively new concepts here, but over time they will come. Talent will get developed, products will be formed, and all of these will come across for the more sophisticated investor base who are willing to invest in these products. And the big growth drivers that we see, I think partly driven by some very good regulation recently that has come through. I think the change or the concept of accredited investors is it's almost like a breakthrough, frankly, for the alternate industry space. It's a very big change which allows a larger population of people to come and invest lower amounts of money. So no longer do you have that 1 crore minimum to have to invest into an alternate investment fund, which reduces your client base quite dramatically. But if you register yourself as an accredited investor, if you meet the basic obligations, the net worth requirements, etc., you can actually invest much smaller pools of capital. And that automatically opens up the available client base, particularly for AIFs, also for PMSs, but mainly for AIFs. SEBI has also allowed a lot of innovation in the form of large value funds. So you can come up with some very unique concentrated funds, customized products. If you have one large investor aggregating $10 million in your fund, you can create something called a large value fund where a lot of the sort of limits of how much you can invest in a single security start going away, and you have full discretion in terms of how you want to do it. And finally, the biggest growth driver that we see is the wealth effect that India is experiencing at the moment. I think never before in history have we seen as many millionaires being created as we've seen in the last 1 year. And this is again driven by a lot of the entrepreneurship that we are seeing around us. Again, India has been one of the biggest beneficiaries of the innovation cycle, the low interest rate cycle, and the private equity cycle that is all confluenced very well together. So we're seeing so many, you keep reading about the record number of unicorns that have been formed. And obviously there's a full scale down effect of that because, a lot of these companies and promoters and guys who make a lot of wealth further take that wealth and deploy it into other entrepreneurial ventures or into other entrepreneurs. So there's a multiplier effect that starts coming through, and the wealth creation tends to just balloon at times like these, as we've seen for the last 1 year. In fact, that's one of the reasons we're very bullish still on India, because the consumption effects of all of this are quite dramatic, and I think we'll realize that as time passes, as the years roll by. The last year has actually formed a phenomenal base for consumption, as well as a incredibly new high net worth base potentially for investments into products like alternates and PMSs. So I think the future looks very bright from that point of view, and I'm sure the next time we come here, this conference room will be either bigger or there'll be a lot more people, most likely. So with that, I think I've reached the end of my thing. So thank you very much.